Extension Public Policy Specialist Brad Lubben joined us in our previous episode to discuss ARC and PLC. That interview can be seen on the Market Journal website under the Previous Programs tab or through the Market Journal mobile app. While at the Power Farming Show last week, we also talked to Brad about how crop insurance comes into play when looking at both ARC and PLC.
Well, if we've talked about what ARC and PLC, how difficult that commodity program decision is, but it's not fair to compare just ARC and PLC, because if you're in PLC, you also have the opportunity to purchase SCO, supplemental coverage option. That's a new crop insurance plan that came in the crop insurance title of the bill. Think of it as a supplemental plan to stack on top of your individual plan. Producers buy individual coverage up to some protection level. Well, SCO is a county-based policy that covers the gap between 86% maximum and whatever protection level the producer buys. So what's SCO worth? Well, it depends on what level of underlying crop insurance you buy. The lower levels of crop insurance you buy, the bigger gap SCO covers, the more it's potentially worth. So what's ARC versus PLC plus SCO worth? It looks like I buy down on crop insurance so that SCO looks bigger so that PLC looks bigger. But then I'm forgetting what buy-up crop insurance is about. So I've got to think about the underlying crop insurance decision. What's my optimal level of coverage in a buy-up policy that's an individual farm level policy? Most producers in Nebraska are buying 70, 75, 80% coverage. We've been gradually moving up in the level of coverage we're getting. With that level of coverage, there's a gap left. Should I think about SCO? Should I think about PLC so that I can buy SCO? Or should I stay in ARC and buy a higher level of coverage? Those are trade-offs that I have to make now that I didn't have to think about before.
With ARC and PLC, it's a 5-year decision, but with this, you can limit your risk in that it's a yearly decision.
Correct. ARC and PLC is a single decision for 5 years. SCO and buy-up crop insurance is an annual decision that you make with your crop insurance agent. Should I buy a higher level of individual buy-up coverage, smaller band of SCO? If I go into ARC, I know I don't have SCO available, so I'm thinking about an optimal level of crop insurance coverage. But that's an annual decision that we'll want to study with some of the same tools that we're studying the farm program decision with.
Your emphasis is that there is a relationship between the two, though.
Correct, very much so, and a relationship to the commodity program itself. So there's sort of 3 parts of this safety net. There's the commodity program, ARC versus PLC. There is the underlying buy-up crop insurance coverage, and there is this supplemental coverage, SCO, that might stack on top if you're in PLC. Think of those as 3 parts of a portfolio, and think about analyzing the portfolio as a whole, not the individual parts of the portfolio. The best decision on the commodity program may not be the same decision when you add in SCO, but that may not be the same decision as when you think about buy-up as well. So think about all of them and put that decision together.
With this attention being paid to SCO, are there other crop insurance options or decisions to make as well?
There are actually several crop insurance provisions, some key ones that have come out. Conservation compliance is now tied again to crop insurance participation. That doesn't affect a lot of producers or a lot of acres, but for some producers that have been out of the program but in crop insurance, it's a new issue to address. Another key change in crop insurance is the availability of enterprise coverage by practice, meaning irrigated versus non-irrigated. In Nebraska, with a mix of practices, the enterprise unit may not have been an effective tool, a choice for producers, because it sort of combined 2 very different practices, one sort of subsidized the other. Now you can separate and insure those by practice. Could be extremely valuable. Another key provision that showed up is for beginning farmers. Qualified beginning farmers, another 10 percentage points of subsidy on top of the existing rates. So very attractive crop insurance rates for beginning farmers.